Now, my last video, I talked about the path for the S&P 500. Back at the October high, I told you we had a hanging man candlestick. We were slamming into major resistance, and we were coming back down to the October 10th low that at 65.50, as I thought a head and shoulders would set up. Last week, we got that bearish engulfing candlestick, and we moved on Thursday and Friday below my target, and I told you, rather than the bearish engulfing playing out to the downside, I thought we'd bounce off the 100 period here in the daily. I thought we'd bounce off the 20 week and the weekly, and we would get that right shoulder. So now that has played out, and I told you I thought that would play out over the Thanksgiving holiday week on lighter volume, and it did. And we had a 5-day winning streak from last Friday's bottom, where we were down 5.79%, nearly 9% on the NASDAQ, and we rallied back up. So with this rally, I want to show you how the monthly charts closed out. We'll look at the monthly time frame as we've now completed the month of November. And let's take a look and see what has formed on some of these monthly charts. And by the way, I hope everybody had a great Thanksgiving, all kinds of fun with family and friends, and shop till you drop with Black Friday. Once again, happy Thanksgiving to everybody. And after we peaked, slamming into resistance on NASDAQ, we dropped nearly 9% down to our low of the previous week. 5 sessions ago, we've got this same potential head and shoulders pattern on the NASDAQ. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, let me know that by supporting the channel today. If you could take a moment to do that, step up to the plate and help out, I would really appreciate that. I just put it all out there and ask that you do what you can to help out. If you could take a moment to do that, I would really, really appreciate it. The link will take you to a secured site and you can donate any amount you want or make it a recurring donation. If you do that, I thank you. It would really, really be encouraging to hear from you. Watch the video all the way through. I'm going to be showing you what's going on with the resistance and the candlesticks that are forming, the reversal candlesticks that are forming in the monthly time frame on all the averages. So make sure you watch the video all the way through. Let's review the weekly and the monthly charts. Now remember, we're advancing, and I showed the volume levels on SPY and QQQ in my last update. We're advancing on declining volume, on very, very light volume surrounding the holiday week. The question is now, institution is going to push it right back down as they begin to come back from an extended holiday, or do they do what they try to do in 2022. Now, I still think the head and shoulders patterns have a very good shot at playing out. That's what Bitcoin had set up. You got this wide range bar, but it's on lighter volume. They're letting the retail investors run it back up. And again, they've been selling into the rallies. Are they going to do that again here or push it slightly above this high? I talked about 2022 scenario where NASDAQ did peak, but yet S&P goes and makes a higher high. I'm not saying that's going to be the case. I'm not predicting that's going to happen. But I am telling you that if the institutions do try to push it back up, that again, the upper channel line, remember in 2022, we moved just over 1.5% above that high. Right up directly overhead is our upper channel, which I showed you in the last video. We got this wide range bar, and what did that do for the month? We had, again, the sell-off for the month of November. We turned down, continued to go down to the 20-week moving average, and then we get this bounce back up. And that's created a very interesting candle on the S&P monthly and on some of these monthly charts for the other averages. The sell-off in November and the rebound back up this last week on extremely light volume that began the previous Friday, gave us the recovery, but look at the candlestick that ended up forming in the monthly time frame. You've got a hanging man candlestick, which is the opposite to the hammer or doji, if you will, that we got at the April bottom. You're likely forming this massive head and shoulders. That's why I think we're going back down towards the April low, or maybe higher, the upper channel line of the channel in the weekly time frame that I've talked about. Eventually, I think you're going to this 50-month moving average and our 200-week moving average in the weekly time frame. Again, Bitcoin's on its way there right now. Bitcoin has already confirmed a bear market, dropping 36%. It's already confirmed a bear market in the weekly time frame and in the monthly time frame. The stock market's going to play catch up. Now, you often will take the stairs on the way up and the elevator on the way down. Bitcoin, when it formed the head and shoulders pattern, it got a dramatic drop in crash wave 3. If the head and shoulder patterns form on the S&P and the NASDAQ and we begin to sell off and they get confirmed by dropping to new lows, then we can see them play catch up with Bitcoin. What's interesting is we got a similar candlestick on all the averages. The Dow moved to a new high, but the S&P, the NASDAQ did not. Neither did the Russell, but they all got reversal bars as we closed out the monthly time frame. So what I'll be watching is by the end of December, do we confirm the reversal bar? I talked about in my last video. The risk is that we don't see the reversal play out immediately, but we see something similar to what happened in 2022. And I talked about that in great length and detail in my last video. Personally, I believe the head and shoulder patterns are going to play out, but I reviewed what happened in 2022, how NASDAQ and S&P diverged right after Bitcoin peaked. They both peaked, and then NASDAQ later, or S&P later went and made slightly higher high, just over 1.5% higher. I don't know that will be the case here, and I'm not predicting that will be the case. Did review that in my last update, but here I wanted to show you this and review these monthly charts because we do have now reversal candlesticks here with our hanging man candlestick here in the monthly time frame. Now with that hanging man candlestick that is setting up on the monthly chart, we still have the negative divergences looming over the monthly chart here. And again, I've talked about the price oscillator, and I've talked about this earlier in the month, that we have this negative divergence that's setting up here. We're likely going to see a move back down towards the 50-month moving average. Remember, I talked about how the 50-month moving average and the 200-week moving average, the green line right here is the 50-month. It's been acting as support through the entire bull market. This is all the way back to 2009. No, the bull market, it began after the 2022 low. Poppycock. People telling us that are the people that were telling us that the sell-off was never going to happen in 2022. This whole thing is a long-term bull market. We never have taken out the 200-week moving average and the 50-month moving average here. You bounced off of it in 2018. Here in 2011, you bounced off of it when you first moved above it. You bounced off of it over and over again. 2011, 2016, just above it there. 2018, you got below it with the pandemic in 2020, got right back above it. You didn't even hold below it down here at these lows. You got a bottoming tail, and then we moved back towards the 50-month moving average here, and we found support at it at the 2022 low, and again at the 2025 April low just above it. So again, we're likely going to move back down there, and I think you got a shot at the head and shoulders pattern setting up. But again, as we've moved higher, we're getting the hanging man. Again, you can see the negative divergence on the price oscillator with the previous 2022 peak, and in our recent price action, the divergence that has formed with the 2025 February peak. Now, by the time this rolled over, we were moving down sharply off of that 2022 high. Again, this is a monthly time frame. We're likely going to see something very similar with this sell-off, and I think you've got this massive head and shoulders pattern setting up. You would never know you'd have the divergence going on with our previous peak in February or our peak back in 2022 here with the price oscillator. You'd never know that if you looked at the MACD. The MACD is moving to a new high. There's no divergence. Now, the MACD is at an extreme. But again, I've said I find the price oscillator much more useful than the MACD, which is based on moving averages. Right now, Bitcoin is getting the MACD, the Johnny-come-lately signal, rolling over in the monthly time frame, confirming a bear market. We're likely going to see this eventually roll over, but by the time it did in 2022, or by the time it did in 2025, after the February peak, by the time it rolled over, prices had a significant drop off of the highs. Now we have the stochastic about to roll over. That's probably going to start to roll over as we move into December, and we have that divergence in the monthly time frame here on the stochastic. Now the RSI in the monthly time frame has a divergence with this previous peak. Back over here, this divergence that formed at the 2022 top. There's no divergence in the more recent price action here. There doesn't have to be. Down at the bottom of 2009, there was no divergence. Now, there were divergences in the weekly time frame, but not here in the monthly time frame. So again, you don't have to have a divergence. Sometimes they form, sometimes they don't. You still have the larger one going back to the 2022 top. So again, I think eventually we're headed down to the 50-month moving average. I think this head and shoulders will eventually set up. Bitcoin's already setting up the exact same pattern. I think Bitcoin's got to go lower to have the market play catch up. So again, keep in mind, as we're slamming into resistance in the weekly time frame, this is a monthly, but the weekly time frame, we're getting this potential hanging man in the monthly time frame. And I've talked about the long-term monthly channel and this trend line from the 1929 high. This is again, this channel goes back 100 years, going into the 1929 rally, in the 1920s. And I've just simply taken the trend line from the low in 1932 after the 1929 crash and the higher low here in the early 1940s, drawn a parallel boundary with the 1929 high, and that's where we are. And I've got this right on the nose, excluding the shadow right there ever so slightly, but right on the nose. And again, you just slightly overthrew it, but couldn't close above it. This long-term channel, I think you're going to turn off of this channel. And let me just move my annotation here. Again, I think you're going to move off of this channel, and I think you're going to begin to move back towards the midpoint. If we get something uglier, back towards these previous highs, as I've talked about, of the bull market tops in 2000 and 2007. And again, channel up close for you so you can see it. And we may not have even overthrown the channel. It's really hard because right here, it's really difficult to draw a long-term channel like this because you got to keep moving the chart back and forth to try to line it up to get this right. So I'm just slightly under this level. If we went a little bit higher, you may not have even overthrown the upper boundary. I got it as close as I could, and it took me a long time to draw this chart, try to work on this channel. I had to lock it into place because it's really difficult to work with these longer-term charts. This is the bottom in 1932 and the higher low in the 1940s, early 1940s. I've taken that from the 1929 high, and we just slightly overthrew that channel line, the upper boundary of the channel, in the month of October with the October 29th high. We're just below it right now, and again, trend line can be slightly off, meaning the trend line could be slightly higher, that we're hitting it because there's still a little wiggle room, a higher low of the channel back in the early 1940s. But I spent a long time working on this chart, and I got it as close as I could. But regardless, nevertheless, we're right at this level. I think you're going to turn off of it. We'll see what becomes of this potential hanging man candlesticks. Candlesticks mean nothing unless they're confirmed, so we do need confirmation in the month of December. We need to take out the November low. I've also talked about my long-term Elliott wave count, and again, this is the monthly chart. I think we're completing here the grand super cycle here with these 5 waves up with 1, 2, 3, 4, and I've marked the whole bull market from the 2009 low as the grand super cycle wave 5. Now, these are the longer term counts, and I've marked here this 5-leg push higher, 1, 2, 3, 4, and the 2022 sell-off was wave 4, and marking it this rally as wave 5. I've marked those as a 5-wave super cycle push higher to get the get the grand super cycle of the wave 5, which is the entire move. So again, these longer term counts, I think you're about to get the larger ABC structure for the next 2 bear markets. As I've said, this one is going to be associated with the banking crisis. We're already seeing the Fed begin to pump billions into the banks. They're trying to stave off the crisis. They're not going to be successful. We're going to see the commercial real estate problems that we're seeing spill over into the banks, and we'll have a banking crisis. That's why the Fed's pumping billions into the banks in recent days. Crisis, and I think you'll get a bull market. And I think this is going to go on into 2027 or so, late 2026, maybe the first part of 2027 or something. And then I think you'll get a new bull market. I think you'll get the debt bomb exploding, and I think that will be the next crisis. Now, I don't know if we come down to this midpoint or come down to this horizontal support from these previous highs. I don't know. I don't know if we take out the pandemic low right there and, drop, 60, 65% or something like that, 70%, or take that level out and get something bigger. We don't know the future, but this is what I think is going to happen. And eventually, I think you're going to this trend line right here, long-term channel. Actually, going back to these levels, that could be the next bear market, though, if we don't get it this bear market. But this is what I think is going on. I believe that we're seeing the topping process complete with the stock market. Bitcoin already confirming a bear market. The stock market is likely right behind it. When Bitcoin confirmed the bear market in 2021, the NASDAQ and S&P were right behind it, and eventually all of them declined sharply in 2022. We'll get a bigger decline in the stock market than what we had in 2022. We're going to officially move into a bear market. Dropping below the 200-week, dropping below the 50-month moving average, as I've talked about. Back to the monthly close. Turn off that long-term channel in the monthly time frame, then I think that you can confirm this candlestick in December. Could we see a big, ugly, wide-range bar that drops dramatically, drops prices dramatically, and we play catch-up to Bitcoin? I think that's very likely. I think that the price oscillator is suggesting with the divergence that is present. Bitcoin formed those divergences in the monthly time frame. People dismissed them. Had divergences all over the place on Bitcoin. People said, technical analysis doesn't mean anything. They scoffed and mocked the warning signs on the Bitcoin longer-term chart. So at least the ones I posted, I got person after person telling me what a dope I was for believing the monthly charts and the weekly charts on Bitcoin, yet they're now playing out. And you've got the same similar type of diversions here on the price oscillator as we saw with Bitcoin right before it collapsed by 36% over about a 7-week period. Now it's bouncing, but it's not done. Bitcoin's in crash wave 3 right now. See my latest video? I'll link it at the end of this one. By the way, in that video, I'll show you evidence of why Bitcoin's not going to go make new highs, why it's going down to the 200-week moving average, why the stock market's going to follow, because it has a positive correlation with Bitcoin. The momentum oscillator is doing the same thing here in the monthly time frame, very similar to what we're seeing with the price oscillator, even though the MACD has no divergence and is moving to a new extreme. And the fact that the MACD, by the way, is moving to a new extreme should be a warning sign. Again, the peak in 2000, the peak in 2007. Again, look at the extreme that we're at right now on the MACD. This is the bubble with the tech bubble. This is a monthly MACD. This is the financial crisis. And look at how extended this thing is right now. It's going to come crashing all the way back down to the center line and probably end up going negative like we did in the monthly time frame during the bursting of the tech bubble and with the financial crisis. But we're very, very far away. Now, we may just come back down to like we did here at the 2022 low, firm up there, mark the end of the bear market in late 2026 or on into 2027 somewhere if we don't go negative, and eventually see a divergence set up in the monthly time frame with the next bull market after that on the monthly MACD. Again, monthly MACD is barely rolling over right now on Bitcoin. That's the Johnny-come-lately signal. You missed all the other warning signs with Bitcoin. That's the final nail in the coffin. It's rolling over, and again, the MACD on the S&P is likely going to join it in the not-too-distant future. So I think the price oscillator divergences will play out in these monthly time frames. We've got the divergence in the weekly. We've got the divergence in the weekly time frame on the RSI. That's taken us down to the 20-week. I told you I expected a bounce at the 20-week and the 100-day moving average. We're getting it in light volume. I told you I was expecting that to happen. I told you, again, I'm looking for this right shoulder to set up. We got the rally that I told you I was expecting. I talked about what would happen. The divergence ended up forming between NASDAQ and S&P. Again, I am not predicting that's going to happen. I expect the right shoulder is likely going to play out. And I told you I think we've peaked, but I told you if I'm wrong about the head and shoulders on S&P, I could be right on NASDAQ and they might diverge, but wrong on the S&P if we go back up and slam into the resistance again. I think it's more likely to see that divergence begin to play out on the monthly chart with the hanging man candlestick and we begin to turn down. We've had the MACD and the price oscillator both roll over here in the weekly time frame. The price oscillator down here has formed a divergence with the previous high, the 2025 top that formed. A divergence had completed right before that top had formed in December, went a little bit higher, and again, this played out. So you have these divergences. That's one thing to consider too, that if we do see something like 2022, here in the weekly time frame, we went slightly higher, turned up briefly on the oscillator for the MACD. The price oscillator couldn't do it, and we saw something similar to that in 2025. We rolled over in December, went slightly higher, formed the divergence with the February high, and I addressed the 2022 scenario in my last video. But we're seeing these divergences play out. If continue to play out without going back up and hitting the upper resistance levels, we'll need to see the stochastic to drop below 50 for a bigger sell-off. Weekly time frame of the S&P 500. And again, the chart I just showed you was the log scaling in the weekly time frame of the channel from the 2022 low. The channel with our linear scaling goes back to 2020, as I talked about my last update, and we did turn off of that. And I told you if we did hit it again, then we would see something like the 2022 top where you hit it, turn down, and then you hit it again, and we got that little miniature double top. We have a head and shoulders in play right now. I'll be watching to see if when the institutions come back, we start seeing selling. Channel. We've got this channel on the NASDAQ that we came up and we moved right into that upper channel line, just slightly overthrew it. You have the larger broadening formation on the NASDAQ, just like NVIDIA has. Keep being told how great 2026 is going to be, similar to what we were told about 2022, and the sell-off happened, and we're going to get a bigger sell-off than what we had in 2022 because we're going to move into a bear market. Hitting all this major resistance is what I'm pointing out here in the weekly time frame. The topping tails at the resistance in the weekly time frame. Now you're getting the hanging man candlesticks, the monthly time frame, and the doji on the Dow, but all the others are getting the hanging man, S&P, NASDAQ, and the Russell. Well, Bitcoin had price oscillator roll over just before the peak. MACD is a Johnny-come-lately. It's just doing it right now. But the price oscillator, again, the triple divergence here. Again, this is what's happened at these other bear markets. The last time we had this happen, NASDAQ and S&P went down right along with Bitcoin as it dropped 78.5%. You had all that volatility when the stock market, when Bitcoin had the bear market in 2017 and 18. Bitcoin's already confirming a bear market in the weekly and the monthly time frame. The stock market is going to play catch up. Bitcoin's the asset with the most volatility, so it peaks first. But we're seeing these divergences play out on the RSI, on the stochastic. All of my signals. At the Johnny-come-lately, the MACD barely rolling over on Bitcoin this month. Bitcoin will be closing the month out on Sunday. It trades around the clock. My price oscillator gave a much better signal. Last time the MACD did this, Bitcoin had already had a significant drop and it moved into the bear market. People predicting new highs for Bitcoin. It's not going to happen. But I'm telling you, the stock market is going to have the MACD roll over, which is at extremes on the S&P 500, higher extremes than what we saw during the bursting of the tech bubble top, the top that we had in 2007 ahead of the financial crisis, as I've shown you in this video. Bitcoin's already taking out the 10-month moving average. We'll eventually see that happen for the stock market. We've got the hanging man candlestick on the S&P 500 monthly chart. Bitcoin did a little bit different. It had topping tails, in July, in August, and in October. It formed a triple top in the daily time frame, more of a double top in the weekly time frame. But you can see the topping tail here, and that's being confirmed this month. So again, the stock market is going to follow Bitcoin. Bitcoin's eventually going to move down to the 50-month moving average, 200-week moving average in the weekly time frame. And again, if you want to see my latest Bitcoin video talking about that weekly chart, Bitcoin moving down to the 200-week moving average, when it is always closed below the 50-week moving average, it always moves not to new highs, but back to the 200-week moving average. So the stock market's going to play catch up. I'm going to show you the monthly here on Bitcoin. How about the Russell? Here's the Russell ETF IWM. Again, notice the bottoming tail and the hammer down at the April low. Notice the candlestick we're getting right now. Another hanging man. Again, getting a lower high. A hanging man candlestick on the Russell in the monthly time frame. How about the Dow? Oh, the Dow. It was moving to new highs when we were told this proves the stock market rally is just getting started. And yet the Dow ended up selling off of those highs. Remember how I talked about the Dow was hitting the upper resistance level and we ended up seeing the whole sell-off be given back with the topping tail. Now we're coming up and we're getting a lower high. Remember that? We got that ugly topping tail in the gravestone doji. It got confirmed, but there's been no follow through. We'll see if we get that with a lower high on the Dow. But the Dow getting this topping tail 3 weeks ago with our gravestone doji here in the weekly time frame on the Dow, getting the topping tail, selling off, coming back up. That's given us a doji in the monthly time frame for the Dow. Again, another potential reversal pattern. We had the bottoming tail for the Dow down here. Again, now we get another potential reversal bar, but we need to see confirmation of these candlesticks. So you got the S&P getting a hanging man. You've got the Russell getting a hanging man. You got the Dow getting a doji here in the monthly time frame. What about the NASDAQ? Oh, NASDAQ gets a hanging man as well. A hanging man candlestick down 1.64% for the month, but again, same exact thing. You've got a bottoming tail hammer here. It got confirmed. Had no months down up until this month, and again, now you get a hanging man candlestick at major resistance for the NASDAQ. Did we see that confirmed in December? Again, I'll be watching the April lows. I'll be watching the 50-month moving averages, the 200-week moving averages. And again, you don't think it could drop because we are seeing the AI sell-off begin. We're seeing the beginning stages of the bursting of the AI bubble. NVIDIA has turned off major resistance of its upper channel. As I've talked about in a recent video, I went through the NVIDIA charts with you. So you got a hanging man here on the NASDAQ. You got a hanging man. And again, a hanging man on the monthly chart and off of resistance, mind you. And you've got a hanging man off of resistance here on the S&P 500 in the monthly time frame. The S&P was flat for the month. It was up 8 points, so it was just slightly higher. Hanging man here, hanging man on the Russell, and a doji on the Dow. All of them are at these major levels of resistance. So I'll be watching these candlesticks for the month of December. Do they get confirmed by closing below the November lows? Divergence on the S&P monthly chart with our price oscillator and the more recent price action. You've got the divergences going on with the Dow, with the RSI, and again, the price oscillator. Stochastics getting a bearish touch, and even the MACD has a bearish divergence on it with the Dow in the monthly chart. I think you're headed back to the 50-month moving average eventually. I think we'll take those out and confirm a bear market. The MACD is rolling over with actually moving below the 50-month moving average and the 200-week moving average. Those are late confirmation signals of the bear market, taking out the 50-month moving average and the 200-week. Russell up 1%, but you're getting, again, the hanging man candlestick. You've got the divergence in the most recent price action on the RSI, the larger one here, and again, the price oscillator. And again, even the MACD has a divergence and the larger divergence on the Russell. Stochastic's not rolling over yet in the monthly time frame. NVIDIA had a down month. It was down, listen, are you listening? Ready for this? 12.59%. It got a sell-off. And we've got this divergence going on here in the monthly time frame for NVIDIA. And again, you've got it on here, the price oscillator, the MACD. Look at the extremes on the MACD. So again, the negative divergence in the monthly time frame. Stochastic's already rolling over in the monthly time frame for NVIDIA. Remember, it's turning off of major resistance in the weekly time frame, long-term weekly chart that I always show in my videos. And again, we had Powell talking about the bubble. There is no AI bubble, and you have all the experts telling us. I've talked about this recently. There is no AI bubble, but again, according to them, this is a bubble, but this isn't a bubble. That was a log scaling for NASDAQ 100. Look at the linear scaling. So again, if you look at the linear scaling, you can really see how ridiculous it is not to believe that we are in a bubble. Look at this. This is from the 90s on up into the 2000 high. This is our bubble now, the AI bubble. And I mean, people are just out. I told you at the April lows that we were going to see the final phase of the blow off top. And I think we've got it. I think these divergences are going to play out. And look at the divergence down here on the price oscillator. I bring up the NASDAQ 100 monthly chart up close. Again, you can see, again, the 50-month moving average has been acting as support. This trend line from the 2009 low, we found support at it at the 2020 low with the sell-off with the pandemic, the 2022 low, and at the just above it there at the low for 2025 in April. I think the price oscillator is going to roll over, and you're going to see this divergence play out from our peak there in February of 2025, and I think you're going to be moving sharply lower towards the 50-month, towards the trend line, towards the April low, and we've got these hanging man candlesticks. So again, do we now begin to see them confirmed and see these divergences begin to play out in the monthly time frame?